We are back. And you know what? So is the good old US of A. GDP is up to 2%. You love to see it. Totally a real number, not at all fixed. We have more data coming out around jobs. We have more talk from Fed Powell. Crypto and TradFi is kind of just chopping today ahead of a bigger day of data tomorrow. We're going to dive into all of that, implications, all that good stuff. Before you get going, hit that like button down below. If you have not subscribed to our channel yet, please do that. It helps us tremendously. Nothing Kevin or I say is financial advice. We are not financial advisors. We're a few guys who love following the markets. So please do your own research before making any buys or sells. Kev, we see that BTC dominance remains high. More shenanigans from Binance and True USD and everything that's being looked into there. I'm sure your BNB shorts are still open. How are you feeling as we head into one of the last trading days of the quarter? What are you looking at today?
Yeah, it's I'm obviously seeing how things are going to be closing because again, this is the end of the quarter, this is the end of the week, and this is also the end of the month tomorrow, right? This is the last day before all the crazy shit happens when we get PCE. So I'm looking at TradFi honestly more than I think crypto. I think I don't know what that was. I'm looking at TradFi, and we're kind of like serious levels, right? We're a little bit above resistance. We broke through it. So now is resistance going to become a support going into the next month? I can see that the Dow is still under the key level of resistance. NASDAQ's doing whatever it's doing. It's been shooting up, coming back down, going back up. For the most part, I think a lot of people are opening up shorts from what I'm seeing for the NASDAQ and tech stocks. But the S&P, I think, is probably the one that I'm keeping an eye on the most. That level for me for the S&P is around 43.25, I think, 43.24, around there. And if we close below that on the monthly, then obviously I think that's going to tell us that we found some resistance. We're right now at 43.88. Don't think we're going to close too much further down from that, or we might even go up even more. But I wouldn't be surprised if we get something terrible happens tomorrow, like PCE just comes in, like it spikes like crazy, or the markets just want to close all their long positions and they start taking profits and we see some downplay. I wouldn't be surprised if we saw like a negative 50 day tomorrow for the S&P or something like that along those lines. I'm not saying it's going to happen, but it's what I'm keeping my eyes on because I think the S&P is definitely got the closest and most important resistance line going into this monthly close.
Yeah, it's going to be interesting to watch it play out tomorrow due to the fact that we have the July 4th holiday is on a Tuesday. So the markets aren't open Tuesday, and they're only open for a half day on Monday. So I'm not sure what exact time they close, if it's like a 2 Eastern close or like a noon East, like just like a few hours of trading. But, are people going to want to sleep in their positions over the weekend going into the holiday? Or are they just going to be like, you know what, I'm closing it out. I'll come back to the markets on Wednesday and I'll reassess from there.
It'd be wild.
What's that?
If Monday is just an absolute like bloodbath and they're just like, close the day, let it be over, let it be over. And everyone's freaking out on Tuesday. And then Tuesday nights when the futures come out, we just see massive gaps to the downside. I would love to see that, but I don't think we're going to get that. That'd just be a fun, it'd be a fun way to start next week.
Yeah, real fun. We had the data that came out today. GDP was revised up to 2%. Previously, it was at 1.6, and then I believe the first, like each GDP, there are 3 readings for it. This was the final one. I believe it went like 1.3, 1.6, and then 2. We saw initial jobless claims came in at 239K, under the 265 from last time, and the 265 that was expected. So the job market remained strong, and then home sales came in at down 2.7% for the month of May. So we're seeing that, not a lot of people are buying. Rates are too high. People don't want to sell and then have to figure out a new place to go. So the housing market continues to just be kind of in this standstill. Tomorrow, a lot of data, personal income, personal spending, PCE, core PCE, the year-over-year number. The big number that we're going to be looking at is the core PCE, which is expected to come in at 0.3% with a year-over-year of 4.6%. That would only be down from 4.7. If that number comes in, noticeably lower than the 4.6, I think the markets, I know the markets are going to respond positively because that's going to, make it even more challenging for the Fed. Maybe they start to price in, one Fed rate hike or another hold or skip or whatever the fuck they want to call it. So those are the big ones we're looking at tomorrow. And like I said, markets are they're closing early Monday and nothing on Tuesday. So we'll see. It's gonna be fun to watch. I'm expecting, if it comes in at expectation, that'll be the boring result. But
Yeah.
if it comes in high or low, then watch out. It could be a fun day in the markets.
You know what really upsets me? Even though we're dated, we're I know I'm gonna bitch right here, but we wait for these numbers and everything like that, and people like react to it. But for the most part, when we see bloodbaths, it's just because we see exhaustion, right? There's not enough demands, and people are just like, you know what? Let me just get rid of these positions because I don't know if anyone's gonna buy my positions. Like it's when we least expect it. So tomorrow, we can anticipate everything to be like, oh, this is gonna be great or it's gonna be bad. Most part is probably going to be a nothing burger. It's just going to close out Q2. But I would love for that to be like as soon as it closes in crypto or something like that, for us just to see massive like selling. It just I don't feel dependent on data anymore to see price action or price movement. A lot of it more or less is just seeing how we're seeing some of the psychology and behavior in the charts and price action. I think that's more in line with what my philosophy is. Powell's going to come out and say something, and everyone's going to do the exact opposite because for some reason they're just not listening to the Fed. They're pricing in, one rate hike instead of two, when Powell's pretty much said that we're not going to go. We're just more likely we're going to do two than one, and it's like nothing he says, nothing the Fed does, nothing in this data really matters. It's just pretty much the market pricing and everything they can. So I think the only way that we're ever going to see this price action absolutely go in a direction, whether it's bullish or bearish, is if the market doesn't price in something that they don't see.
Yeah, it seems to me like the market still has the two hikes priced in. They started doing that on Wednesday. We're seeing, to that point as well, bond yields are up on the day. Bonds are so boring to talk about, but they do provide like an indication of where money's moving in the markets. Like I just can't get excited about a bond moving up 0.16%. Like it just doesn't do it for me.
It's a mature market for you.
It's way too mature of a market for me.
Yeah.
But bond traders, they're pretty sharp for the most part. Probably sharper than me. Let's be honest, they are. And we can get some interesting data points there, like that 2-year, 10-year spread inversion is still huge. That's always an indicator of a recession. I was reading an interesting article this morning about what's going on in China and what's known as a balance sheet recession. This was coined by a Japanese economist named Richard Koo. And basically, what he looks at is, this point of a recession where inflation is really low because demand is so low. And households and businesses aren't borrowing. They're putting all their income toward debt rather than consuming and investing. And it's a different situation than we're in here, right? Like, because if we see inflation, I don't think we'll be seeing inflation near zero anytime soon. Like China's inflation is very low. And for them, it's a pretty easy fix and one that, this economist believes they will do, which is just putting more money into the economy. And we can't do that here in the States, right? Like we've put as much in as possible. Give me 1 second. Yeah, sneeze.
Bless you.
Oh, Jesus. Sorry, I meant to hit mute there. Guess I did not. But it's an interesting, it's a very different situation that they're in than we are. And for them, it seems like a much easier fix. Whereas here, we're just kind of like up shit creek without a paddle, man. Like best of luck to everyone out there. I hope you've stayed liquid. I hope you can, take opportunities to make some buys when things go down, because it is in fact going down.
Yeah, it's I mean, we all know it's going down. I think we're just lying to ourselves at this point. And we're trying
It
to
just
see.
feels like we're just kicking this fucking can down the road. Like it's just getting kick down the road. Like when, the piper is going to have to be paid at some point, right?
Yeah, that or he's going to take all the children out of the village, just like the end of the story, right? And that's all the people that buy in right at the end. That'll be the metaphor we use for that.
Yeah, it really does just feel like maybe we're going to chop, be range bound for a while. Maybe we see a little rally near the end of the year before the rug gets pulled out. I don't know. Like, feels like the Fed keeps kicking things down the road, so it feels like we have to keep kicking our bearish takes down the road as well. Like,
but the weird
maybe
thing is, nothing adds up here, right? Let's be honest. It's fucking weird. The Fed is saying that we don't see inflation coming down at any point, for the next 2 years. We're not going to see it getting to that 2% level, and for at least not this year and not next year. That should be bearish, right? That pretty much signifies that they're going to hold rates for a period of time, or they're going to increase them, right? We got 2 increases that are likely to happen. They're probably going to hold it for a period of time before they start doing rate hikes, and then maybe we get to that 2% inflation, right? It's going to take time, but we keep buying into this, knowing fucking well that the rates are going to continue to stay high, right? That means that people won't be able to borrow, or won't be as willing to borrow. Loans will. Why would you borrow at 6%, right? Makes no sense when you could just be patient, borrow when it's 2% or whatever it is. But it's just insane to me to think that we're going to continue to just buy into a market because why? Because everyone else is buying in. I couldn't tell you one thing. Or I mean, we're going to get earnings soon, right? From Q2, and it's like, did we do anything? Was there anything notable to the point where that makes sense in this market? Are we just buying because everyone else is buying? Like, I don't think anyone really knows why they're buying, why they're selling at this point. We're just kind of following one another and just trying to make some money along the way. But again, if there's no actual reason behind this market that it's going up, then it's going to break at some point. And are we pretty overbought right now, or is this exhaustion? Yeah, probably is. But again, this could go on for a period of time still, but it's not sustainable in any way. That's the most aggravating part, I
It
think, about this
feels
market.
like the buying has been one of two things. It's been positioning defensively in case we do see an economic downturn. We talked about some of those defensive positions to take, whether it was stocks like Walmart. And then there's also been, and we talked plenty about too, the AI like FOMO. And that's been where I've seen the only I didn't FOMO into the AI stuff because I was already kind of positioned there. And I haven't really shifted too much defensively at this point because I would almost rather just keep it in cash and move that cash into some higher upside stuff. But that's what I see a lot happening right now. And the charts back that up too, with the fact that the S&P, like we've said, is only 7 stocks have really accounted for most of the gains. And some of the defensive positions, as I got Walmart on TradingView right now. They've had, year to date they're up. They've had a good run so far this season or this year, as people have taken that more defensive position. Will that continue to happen? I'm not really sure. But if we look at some of those companies that provide those consumer staples that are recession proof, like people still got to eat, people still got to wipe their asses and blow their noses, but you got all that smoke over there, buddy. You guys still got to go to Walmart to get your Kleenex. So those basic needs are still going to need to be met, and Walmart is positioned to do that. So I think that's a defensive one. I think these defensive dividend stocks are still decent options, depending on your risk tolerance, your time horizon, all of that stuff. Whereas if you're younger and you got a longer time horizon, DCAing into some of these higher upside tech ones, when we see big red days, is probably going to be your better bet.
Yeah, for sure.
Mr. House, GM, good to see you. Randy, same to you. Good afternoon. So Kev, that's kind of our macro view on things. Anything, I know you said that you've been looking more at TradFi as we head to the end of the quarter and, all of these weekly and monthly closes tomorrow. What have you seen in the charts there? Is anything the crypto charts catching your eye?
Yeah, I mean, I can pull up a few. I do want to get into Bidenomics too a little bit, because that's going to be because I'm maybe we should just open up to everyone. What does Bidenomics mean? I'm absolutely lost for words. I read the definition of the tweet that the White House posted, and I still have no clue exactly what it entails. What's the plan? So if I pull up the charts,
is it the White House's official Twitter account?
Maybe it was Joe Biden's. I have no idea. I don't follow either. But
here's how Bidenomics is educating and empowering American workers.
Here we
go. To grow the middle class. Share of working age Americans in the workforce is higher than at any time in the last 15 years. Real incomes and household net worth are up. More good paying jobs that don't require a 4-year degree. Support for unions is the highest it's been in more than half a century. Okay. I guess that's accurate. I'll take their word for it, I suppose, even though I don't really want to. But yeah, okay. is net worth up? Like, if we also see that debt is the highest it's ever been. Like, I, I don't know, man. I don't know. That doesn't really add up to me.
I'm more just confused by what the actual economic plan is. Is it just continue to raise rates, allow it to be high for a period of time, and somehow everyone still gets rich? That's interesting to me. I also think that how inflation at this point, even though it's relatively in the fours, that it's still affecting middle class and lower class people more than it is people who are high net worth individuals. And unless our net worth is being compounded since January 5th of this year, then I don't necessarily see a way where everyone's net worth is up during this administration, right? Where again, we're still further down from what the height of the bull market was.
I think they're also cooking the books in the fact that they're probably, I'm assuming, putting people's home values into their net worth, understandably, while at the same time, no one's buying or like home prices are jacked up because no one's fucking buying or selling because the interest rates are so high. So it's like, let's be real here. That net worth number is it's probably not that's not like your liquid net worth. That's for damn sure. People's like liquid net worth is not anywhere near all-time highs or whatever the hell they're trying to say. Like, when you account for the fact that, like, okay, yeah, people, you can include that home value in there, but people aren't selling their homes right now. We saw it in the data that came out today. Like, it's just not happening. So it's just such a disingenuous statistic. And let me be very clear, I am not Republican. I've unfortunately voted Democrat most of my life. I don't know what I'm going to do in the next election. At this point, I'm just moderate. But it's, oh God, it's so frustrating. Like, I hate it when both sides do this, when they just, because you can make data say whatever the hell you want it to say, and people aren't going to question it. Most people, at least.
What's the word? Is it lie? Is that the word that's the definition of that?
Manipulate, maybe.
Manipulate. The manipulators. Gotta love them. They run this market. But the thing that pissed me off more or less, because again, it's going from Bidenomics, which he said in my hometown of Chicago yesterday. That was when he gave the speech. So round of applause for my hometown. The best part about it was when he today, I think it was today, when he talked about no more tax loopholes for crypto traders. Please, if there is a fucking tax loophole, let me know about it, guys. Drop it in the comment. I would,
yeah, where's it been?
I would love to know where I could find a little loop-de-loop out of here. But I haven't seen it. I've definitely been paying my capital gains tax. The IRS has been getting my checks every year. So unless Biden is talking about some type of crypto traders that they're doing something that, I'm not doing, maybe I'm just trading wrong. But I feel like we're getting to a point where, we're getting to election season. We're going to start talking about, how people who make money and accumulate wealth in the world are, the bad guys, and then the people who are working are, the good guys. And it's like, yeah, you can say it like that. Not necessarily everyone who makes money is a bad person, right? It's a lot of it's through patience, time, hard work. Many people have multiple jobs, and some people are willing to take that sacrifice of putting in hard work to make some money. The actual value of your net worth isn't necessarily what makes you a bad person. I think this demonizing of crypto traders, once again, similar with the SEC, is also something that's going to lead to a mass exodus of maybe younger people in this country, which would be I wouldn't be surprised, because again, maybe people feel disenfranchised. They don't necessarily agree with a lot of what's going on. Maybe some people just want to be rich, right? They don't want to do bad things. They're just making money and they just want to enjoy life. I mean, start a family. So I could definitely see, some of these places, like, again, we're seeing a lot of states where people are moving to. It's like Tennessee, Florida, where, they're not paying income tax. But I could see, people moving to, like, I don't know, El Salvador, some of these like high crypto, appreciated countries. So again, this type of language is BS, in my opinion. We're seeing
somewhere where they want people to, to come and create businesses that are, driving things forward and not stuck in the past. What a novel concept.
Yeah, it's insane to see how, I mean, again, I'm not surprised. It's nothing we can really do about it, but just when you continue to see this language and people are like fighting about what the outcome is, it just gives you more incentive just to keep your head down, make as much money as you possibly can, then just run your life the way you want. This is, I won't get into it too much because I really don't give two shits about politics, but it's just, we're in a situation right now where I feel like the numbers are definitely being cooked, right? it's not necessarily the most true place. So again, we're seeing tons of manipulation in the crypto markets itself. You can't really trust anything. The only thing you can trust is yourself, the charts, and your convictions. And you just got to be careful out there and try and make money in some way possible, whether that's corn, whether that's some Argentinian stocks, who knows? But yeah, obviously just be careful. And then again, this is just BS right now. I guess that's my little rant.
Okay, balls of steel. We touched on Bidenomics. It's all horse shit.
Exactly.
What do you want to take a look at any charts as we begin to wrap up today's show?
Yeah, I want to look at the S&P just because we were talking about that. So S&P, when I look at this on the monthly, where is this? Is this the right S&P chart? There it is. That's the one. All right. So we can see that.
Yeah, that first one didn't have enough lines on it.
No. This is the one with the lines, right? It's wearing a little striped sweater. Right here, this green line is the major resistance on the monthly. You can see that we're clearly above it right now. A few days ago, we weren't. So there's that information. We were probably right here. We were at 43.37. We came down, we tested it, so we found some support on it. And it does look that we are going to push up a little bit more. And again, we were in a parallel channel for the longest. Hit our ass, head, ass, hit her head, broke through. But did we break through? Actually, I'm looking at this right now. We might not have broken through. So let's bring this over here. And currently where the price is at the top of the resistance channel. But again, the daily is oversold and looks like it's going to make some room to the upside. So maybe we do break above this and find some support on the parallel channel. That would be unlikely that we continue on from this unless we're putting in a bigger continuation pattern. This is, to me, this is a bear flag 100%. Higher highs, higher lows to the point where, we're testing the top of the resistance. This level here was pretty good resistance until we broke above it. Now it's acting as a little bit of support on the daily. Let's look at the weekly. The weekly is extremely overbought, right? So maybe the daily is telling a different story than what the weekly is. Maybe we have a little bit of progression on the daily, but this weekly is completely overbought to the point we're at, last week we were at 100 and 100. This week we're at 98 and 58. As close as tomorrow, which also coincides with the end of Q3. So if we end, Q2. So if we end Q2 and we're still in this parallel channel and we're extremely overbought on the weekly, and let's see what the monthly looks like. Monthly will be overbought. This seems like exhaustion to me. So maybe get some, green here, green there, red up and down in the next few days. But for the most part, it looks like this monthly and this weekly should close within this parallel channel. And it seems like we're going to be extremely overbought. So for the most part, this has been a great run. And as Jim Cramer says, invite me to your funeral. But for the most part, this is 100% to the point where we are seeing a lot of, we're going to start finding a lot of resistance, I think, in price action moving it up. Does it mean it can continue to go up? Absolutely. I could be definitely wrong and say that this is one giant moves, 1, 2, 3 three-way move to the upside. It could be a 5-way move. Really have to see. I honestly think that this is just, a small dip, little relief rally before we do continue down. And that would be coinciding with the double dip recession. I will say this about the double dip recession. I would have to be taking the data from 2022 where we had two negative quarters of GDP growth. And then I would anticipate that we're going to see another 2, whether this year or next year. We also saw 2 negative quarters of GDP growth back in 2020, which would have been COVID-19, right? So we could say that technically a double dip recession already has happened, or we could say that we're going to get a triple dip recession. Which one will it be, JWeb? Triple dip.
Shit.
It's possible.
The old triple dip.
The new triple dip.
The old triple dip.
Never happened before.
That.
But we did get 2 negative quarters of GDP growth in 2020. Got them 2 more in 2022. And say if we get one maybe later in 2023 into 2024, the triple dip recession. And you'd be the first generation to experience it. So that'll be really interesting to see if that plays out. But yeah, I'm excited. I was saying double dip. Now I'm going to say triple dip. But yeah, that's what I see for the S&P. I think the S&P needs to close below this 43.90. What is it? Yeah, 43.91. No, that's the wrong one. 43.24. That's the key level of support or resistance. If it closes above it, it's not the end of the world because we are still within this parallel channel. I do think that we are going to be extremely overbought soon. And another thing that's not necessarily great for the S&P is that the dollar is still fairly strong. But on the monthly, we are getting a bit of a red month right now for the dollar. We got some pullback. However, the monthly is extremely oversold on the dollar. So if we go to the weekly, You can see that we're coming out from the overbought. We're below it, probably finding some resistance on this 50 moving average. Maybe we do have to come back down and test this 200 EMA. Maybe this 200 EMA climbs with us into the next few weeks, and we just kind of like coil up for a period of time before we start to see something, shoot the dollar off. PCE could also shoot the dollar up, right? If it's a bad number, price is going to go up the strength of the dollar is going to go up. If it's a good number, we're probably going to see another stupid red candle. And I mean, stupid red candle where it's like based off news, right? Something similar to like this, where it just shoots down, insane amount right here these days. That's what I would anticipate if we get a good number for PC tomorrow. But if it comes in hot, then I would anticipate it to be a pretty green day for the dollar. So we'll keep an eye on that. Your VIX is still extremely low. It's actually lower than what it was in June of 2021. We are currently at the levels of September of 2019, February of 20. So right before COVID. We're at the COVID level right now. So that's very good to see. Usually when it's down pretty low for a while, when it does shoot up, it's like a piss missile or a piss rocket, like you used to say. Exactly.
Piss missile.
Piss missile misses the entire toilet seat right on the wall. That's what we're going to go for. And, let's see. COVID-19 was down here at 13.61. Hold on. Maybe if you go up like that, went all the way up to 80. What was it? 80. Where am I? It's a big number. It's in the 80s. We'll leave it at that. I'm not going to get into the minute details of exactly where the VIX went, but pretty much it went from 13 to 85 in that range. And again, that was because COVID-19 is a black swan event. Let's not sugarcoat it. I don't necessarily consider it to be a true recession, even though we did get those 2 negative quarters of GDP growth. But for the most part, that the market's rebounded extremely quick. 17 days, we started climbing right back again. So when I look at where the VIX could potentially go, maybe if we get a black swan event, we could shoot up that high. But to be reasonable, I do think that number should be climbing up at some point. It's not going to stay this low forever. And when it does go, it does move fairly fast. So that's what I'm seeing for the VIX. Down NASDAQ, NASDAQ, you're in this parallel, you broke out of this parallel channel. You're just riding on top of it. That's on the daily, so maybe a few more days up. But if we look on the monthly, stochastic RSI is extremely overbought. And I think that this one is going to be the one that hurts more than the Dow and the S&P. S&P, I think, will get hurt pretty bad. I think the Dow will too. But I think it'll go in the order of which index gets hurt the most. It's going to be the NASDAQ, the S&P, then the Dow will last. This is just insane, right? This is 7 companies. They're absolutely shooting this keeping this up since the beginning of the year. But this is the monthly chart. That monthly chart is absolutely insane. That's that's mental. It's totally mental. So once we get into the overbought here on the monthly, should be some resistance, hopefully. Do we think we're going to put in a new high? I don't necessarily think so. I think if we grab this trend line here, let's do something like this. Like the fact that we found some resistance up here on the monthly at, what is this? 337. We could potentially, start to climb down here, maybe hit this. We could be forming a trend line, or we could just see this absolutely collapse. But I do think that we are going to see this more of a collapse than we are going to see necessarily, a slow descent. It'd be more similar to what we saw over here, because if we do put in something where it's like hitting resistance here, that'd be technically a bull flag, and then it would probably shoot up once again. Do I think that could happen? No, but am I open to the fact that the market has done everything that I don't want it to do? Yeah, absolutely. So just keep an eye on that. But for right now, this is a pretty unstable structure that we put on the monthly. If we look on the weekly too, we are, been extremely overbought since, what is this? March 20th, 27. Yeah. So March 20th, week of the 27th, all the way till currently. We've been at 100 exactly from May 15th all the way till last week and the 20th of June. So, I mean, it's extremely overbought. This is extremely frothy. And again, putting in this parallel channel, not necessarily a great thing. If it does break down, this 50 is going to follow right with it. 200 is going to be, a little bit delayed. It's going to be focusing on some of the data that's coming up here. So the 200 will probably climb a little bit. 50 should be following faster than 200. So we could get a death cross on the weekly. And that's that's not necessarily a great sign for the market. And again, if we do look at this here, this parallel channel here, this is the reason why we did break up a little bit from this. But I do think that we are going to be finding some of this resistance again, mainly because we've been overbought for some period of time. You could keep pumping money into the market, but I also know that the market makers like to make money in both directions, right? I think a lot of short people are shorting NASDAQ and all these tech stocks specifically because it's only been 7 of these stocks that have been holding up this market. So definitely going to keep an eye on that. That could also lead into a bit of a short squeeze, but I don't necessarily think that there is going to be a short squeeze for this. I think that TradFi is definitely going to find its due pretty soon. I think that either the height of this move has been put in or it's going to be put in fairly soon. Now, is that different from crypto? Absolutely. We'll get into crypto right now. It's the last thing we'll look at. And that for me is Bitcoin, right? We're going to take a look at Bitcoin. We saw that it did shoot down to 29K. Do I think it can go down a little bit more? Sure. I think it could go down to about 29.5, mainly because we've seen a pretty good move to the upside. But the daily is pretty overbought on the stochastic RSI. Pushing down to, let me see if I can find, there's too much shit going on here. Sorry, JWeb. I agree with you. There's too much stuff going on in these charts. We know that's a parallel channel there. Let's go to the 4-hourly. I think you can see it better here. Yeah, so we are putting in this bull flag, right? This is or bear flag, bull flag, yeah. Lower highs and lower lows. That's what we're putting in, and we got this 50 moving average right here at 29,906. We did bounce down here and we got into the 29s. I think that we are getting pretty close to overbought on the 4-hourly as well. So I could see us pushing down a little bit more. Maybe we get to, I don't know, like 29.5. 29.5 wouldn't be necessarily a bad idea for us to find some support. I do think that we are going to push out of this because this tends to break to the upside. And again, we talk about that CME gap for the past couple episodes, and that's a futures on for the Chicago Mercantile Exchange. And for the most part, if we are this high already, and I do think that this is forming a bullish structure, I wouldn't be surprised if we do see a bit of a manipulated move where it's fast growing. We shoot up similar to how we did back here. We went from 26 all the way up to 30. So that's 4,000. If we're at 3,550 right now, all we have to do is get to 30,550. We have to get to 34,005. And that's pretty much where that CME gap is met. And that would be pretty much liquidating tons of people who are shorting the market. That would also open up tons of liquidations on the downside because everyone who's been longing is probably still holding that position at that point. That's not necessarily a great thing to see. So when I see that, and also Bitcoin dominance continuing to climb, and we can also see that, obviously we're above 52% right now. Tether dominance, we're above 7.3, which is pretty good. Again, I think that staying in this range between 7.3 and 8 is necessary. Again, that's more or less just saying that we are bullish on stables and not necessarily on, altcoins or Bitcoin itself. That tells us that we're more risk adverse than we are, being a risk on it for the time being. So keep an eye on that. Total market cap has been absolutely wild the past 24 hours. We've seen it go down all the way to 1.11 trillion. It came back up. Now we're sitting at $1.14 trillion. And we're forming this, this shoulder pretty well. And we're putting in lower lows and lower highs. So I could anticipate a little bit push higher, maybe to this 1.8, $1.9 trillion market cap. And then from there, I think that'd be a point where we start to see some collapse. And what could push us up here? I can't even speak right now. I need some water. What could push us up here? It's Bitcoin, right? Where that CME gap. We're going to see the Bitcoin market cap probably shoot up. And if that brings us up to this point, we're just putting in, this would be 1, 2, 3, 4, 5-way move to the upside. We could come down. We could be forming another head and shoulders within this right shoulder. So we have to keep an eye on that. But I do think that when we look at this on the weekly, not the weekly, the monthly, I think it is. Yeah, on the monthly, we're going to be overbought on this total market cap pretty soon. And if dominance continues to rise, I think that the altcoins are going to start to bleed out even more. And then again, Bitcoin shooting up is just doing that to liquidate a lot of shorts who came in early. And if we get to a point where we hit 35K and then we see a wick and it goes down instantly, that pretty much tells you that, okay, that was the end of the move. Now, we built up all this liquidity. We've created all these gaps in the downside. Let's just take everything out in one full sweep. So that's what I'm seeing for crypto. I think that 35K is on the books and it's possible. Again, anything can change at any given moment. I think maybe a little bit down for the short term to like that 29.4, 29.5. Then we could start to see maybe some manipulated move to the upside. And I say manipulated because I don't know if retail is going to be able to push up the price $4,000 fairly quickly and fill that gap.
Well, okay then. A head and shoulder inside of a head and shoulder. That's it's not really legal in most places, but here we are. That is going to wrap it up for today. Appreciate everybody for watching. If you have not yet, hit those buttons down below. like, comment, or hit that like button, subscribe, drop a comment, share us out on social media. Appreciate everybody who retweets the reminders on Twitter. That really does help as well. We'll be back tomorrow, same time, same place, closing out the week, the month, the quarter. We're going to discuss some of our winners and losers of the first half of the year, give our thoughts on, where we're placing our bets for the back half of the year. So a lot to discuss tomorrow. It's going to be a good one. Appreciate everybody. Have a great day. We'll see you next time.
Take care, everyone. See you tomorrow.